Welcome to the 2024 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Friday, August 2nd, 2024 edition. Please be sure to subscribe to this channel for the latest interpretation of financial news data as it becomes available. I appreciate your support and comments. And let's continue to push forward, ladies and gentlemen. But right now, the Dow Jones is down over 600 points here as it begins to close here. And this is because the data that's coming out has been historical in many ways, when unprecedented times. And we're just blessed to be able to continue to, survive and to all of us here and to thrive as best we can in this type of environment, because unemployment today claims hit highest level in almost a year. And so now, we have a situation where, according to data released by the Labor Department, the U.S. Bureau of Labor Department here, August the 1st, jobless claims the week ending July 27th rose from 249,000 from 235,000 for the prior week. This is the highest since August of 2023. And remember that a lot of the other workers just came back on a year or two ago from the furlough that was going on with the health crisis that we had the last 4 or 5 years. So how is all this is going to be positive news when we were expecting one rate cut? Now some people are saying that we're going to possibly see 2 rate cuts before the end of this year because economic conditions are slowing down significantly. And remember, the U.S. companies only added 122,000 jobs in July. If you remember, in previous months, in May and April, we were adding up to 250,000 jobs. Now we're down to just 122,000 jobs. And that's down from 155,000 in June. And so the numbers are being revised downward here for the latest couple of months. The last 3 or 4 months, we've been seeing data that hasn't looked as good as what they've been saying in the mainstream media. And so this is very concerning for both the markets and Main Street, Wall Street, and everybody in between, because if spending slows down, that means that this economy is going to be stalling out, because that means a recession could be on tap for next year, sometime next year. Summer of next year, could be earlier, who knows? But right now, the data saying right here, according to Reuters.com, Fed seen cutting rates by 0.5 point in September after weak jobs data. We just showed you the jobs. I just showed you the jobs data here. So that means that they're going to go with a 50 basis rate cut. As a matter of fact, remember I told you in the last video, I think a full 1 point basis point is needed in this case, because obviously if you're going to start cutting, you're going to have to go all the way. You can't do timid cuts like they've been doing in the past, 25 here, 20. This is not the kind of economy you want to do that in. If you're going to cut, you might as well cut all the way. If you're going to go raise, like, you might as well go Paul Volcker style and go and raise this thing up, 2 basis points or whatever it is to get the interest, to get hyperinflation under control. So either way, you kind of have a situation, you're darned if you do, you're darned if you don't. But this is what's happening, ladies and gentlemen. And so right now, traders are betting on Friday that the Federal Reserve will start easing policy, quantitative easing. That means printing up money and dropping these rates in September. So we have the next meeting in September with a big 50-point interest rate cut after the government data shows that we added fewer for our workers than last month and the jobless rate rose. See, they have a deadly combination here, because we have unemployment still rising now, as you know, ladies and gentlemen, and we also have prices still rising. At the same time, we're having, the companies are hiring fewer and fewer workers. So this is not a good combination heading into fall and winter, as you know. But the good news is, like I said, the economy is still going on. They still have the tools. The Federal Reserve Bank still has the tools to cut everything. The question is, how much of an effect this is going to have on the mainstream economy, with oil prices falling to a 7-month low as demand fears overwhelm war risk. Once again, we're involved in all these conflicts. And if oil continues to fall and demand for oil slumps, that's another major reason, that's another major influence of this economy. The petrodollar, with many of these Middle Eastern countries getting off the petrodollar and going to other forms of currency, the BRICS nations and other things like that, it's possible that it also can throw us into a recession. Brent crude oil slipped to below $77 a barrel here. So that means that this oil is going to be, prices at the pump is going to go down. It's not going to go down to when we had it under President Trump. We're never going to see probably $2 a gallon or $1.50 a gallon, that's not going to go that far down. Don't count on it. But we will see somewhat of a reduction. Maybe the $3, $3.20 or something like that, $3.15, $3.20 a gallon in some areas later on after the summer, after Labor Day, perhaps. Because it takes time for all this to filter through the economy, as you know. Now, the stock market is certainly freaking out here. As you can see, Dow Jones below 40,000. It dropped 2 full percentage points today. Same with S&P 500. Same with NASDAQ, as you can see. And right now, according to CNN Business, fear is driving the market, because now they're freaking out. People are freaking out because they say, well, they're telling me that everything is good. Now they're saying, oh, we may have to do 2 Fed rate cuts on these interest rates. because stock markets is I mean, because prices are going up and everything is happening. Dow Jones fall more than 600 points, and so we're entering a slowdown in hiring, and that's the key phrase I want to emphasize to you today, is that to continue to prepare, hang on to what you have, try to pay off as much debt as you can, because when the slowdown happens and they try to lower these rates, yes, it may ease the pain in terms of credit card debt and auto loan and student loan debt and housing debt, but the pain is still going to be evident in the fact that the spending is going to slow down. People are only going to spend on essentials, and that means that recessionary fears have arisen and that the recession is going to happen sooner rather than later. That's why I say by next year this time summer, regardless of what happens politically, we're going to be in a slowdown. I should say a recession, but we need 2 quarters of negative GDP or negative growth for a recession, so they won't call it that until after that happens. But we will be in a slowdown for sure next year. By summertime next year, we're going to be in a slowdown. So Dow Jones and S&P 500, they're just now feeling the effects of that. But still, tomorrow, who knows? Monday it can go back up 500 points, but that doesn't mean all was well, because they just told you that this is here for the long term in terms of this hiring slowdown. Excuse me, as we get into more AI type of economy. Another thing to look forward to, look at as well, is that the unemployment claims, both the initial jobless claims and the continuing jobless claims, both rose yesterday on Thursday. If we see that by next week Thursday, if we see that again, then that tells us that it's a trend. That means that we're trending towards seeing claims rising, and people are either transitioning work or doing a gig economy. We have to look at the gig economy numbers too, because some of those numbers can be manipulated too as well. How many of those people have part-time jobs? How many have second jobs in addition to a main job? How many of those people are not counted in the actual job statistics, who gave up looking for work? So that's also what we have to look at too as well. And so all of these factor in to this economy that we say. But right now, I can't call it a booming economy right now. It's a tepid economy. It's a lukewarm economy, and it's an economy that's going to be struggling with trying to figure out how do we cut rates. Why are we cutting rates in a supposedly booming economy? That's not the way things are supposed to be working around here in the normal economy. So this is going to be bad, because if they cut rates in September, that means they're going to have to follow up with a cut rate in October. So technically, we could have 2 rate cuts before the November elections, and that's not going to be a good thing for the candidate or any candidate coming into this type of environment. It's going to come into a mess. That means more debt, more government printing, more quantitative easing. And that's going to just destroy the purchasing power that we have now in the U.S. dollar. So you can expect prices to continue to rise on your food, your water, your transportation costs. And it's going to take more dollars to buy less goods, less services, basically. So that's what we have going on now. In some states, property taxes have not risen. That's great news. In other states, property taxes have risen by 20 to 30%. And so look out for that in the fall to see what these school districts, police, fire, and other property taxes, look out for, see if they're going to raise rates this coming year in 2025. Right now, it's a 50-50 chance. We don't know, but I believe that they will, because they're going to see less revenue, especially if the Fed begins cutting all these rates down. It won't get down to zero. If the Fed begins the quantitative easing, we won't see a zero, but we're going to be pretty close down to their 2% or whatever target they have to cut these rates from the 5.5% rate is at now. So continue to enjoy your weekend. Be blessed. Continue to stay prayed up. Continue to work hard. Be diligent in everything that you do, and strategic, as we continue to get this news in that shows that things are definitely on the way to slow down, at least for the next year or two here, and things are going to be cooling down here significantly in the housing, credit market, and also other markets as well worldwide. Okay, I'll talk to you soon. Thank you for listening. Be sure to subscribe and pass the word on, so you can get the notifications here of the latest news coming out here from this channel. Thank you. Be blessed. I'll talk to you soon.